everybody, welcome to Stockradar, Stocks on the Move for another week. Today's date is the 12th of December 2024. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, today we're going to talk a little bit about the portfolios, how they work, they're back, they're running well, the markets are going well. There's just not a lot of stocks, but there's some great stocks doing well. Just have a look at a couple here. I want to talk about who would have thought in May REA was 185. It's now 251 in December, but this has happened. Who would have thought in September Qantas was $6.90? Today it's $9 in December. It has happened. Again, in May, TNE was $17. It is now $31 in December, but it has happened. These things are what the stock market does. When it runs, and there's no real rhyme or reason for it. Fundamental valuations can't possibly justify these sorts of things, but they happen because of market sentiment, human behaviour, and that's what we're here to capitalise on, because that's how you make money. Okay, it's what bull markets do repetitively. Okay, they show up these stocks, and there's plenty of them out there at the moment, and a lot of stocks still going down, but we don't need a lot to make us some money. We don't know when it's going to happen. We have to have a trade plan that knows how to capitalise on these trending periods, and that means knowing when to exit as well. So it's going to be a full package what we're doing. It's very easy to buy in these markets, but knowing when to sell and to make some and to understand, have some expectations about what you're doing when you do sell, as far as getting the tops of the market or making money, is an important side of it as well. Okay, so firstly we're going to go off. Here we can see you're starting the portfolio premises. In a bull market, I make you money, and a bear market, I protect and I keep you safe, and that's what we try and do, and that's the bottom line. Because remember, the markets go up most of the time, and we'll see in my portfolios a bit later on the results from 2003, how they performed and how they still go up all the time, as the stock market does. Okay, so it's an exciting period we're in at the moment. We've got to make some money, so let's have a look at what we've got today to start off with. Okay, firstly, top 10. No, we've got a top 10 first. Okay. Okay, top 10. Okay, here we have Zero, CPU, TLS Pharmaceuticals, TNE. You can see here just an extraordinary move. You can see just a simple breakout there down here back in May this year, and it's just rad, and there's been really hardly any corrections in this move from $17 to $31. What a beautiful trend, and trends are trends, and they're there to follow, and not doubt and not worry, just follow with your stop. Okay, so that's a really good one. We've got CMM, GMD from the mining sector. We have a few small miners doing well. JB Hi-Fi is on its way to $100. Premier Investments is doing quite nicely out of this mine deal by the sound of things, which you would expect from Solly Lou. Qantas is back kicking goals again, extraordinary enough, and of course Pro Medicus, which has had a bit of a tick down this week, and we've got to watch that because we've got a lot of profit there, and I talk about that in the newsletter this week quite extensively about what do we do now with PME. So that's something for you to have a look at in the newsletter if you go to the website itself. Okay, so that's the top 10. There are more top 10 ratings I can tell you at the moment, but there's some of the good ones at the moment. We are actually up 6 stocks this week. Actually 5 stocks and 1 ETF, I think, this week. So our stock picks are now to 53 of 153, so still just a third roughly, but we don't need many to make money, so that's fine there. We've got 7 in ETFs, and that ETF package will be reviewed at the end of the year. I think I have a few too many indices related things, and we're going to chuck in a few other ones that might be of interest to you as well on the review at the end of the year. Okay, so now let's have a look at the overseas markets and see what we're seeing at the moment. The Dow Jones Industrial Average, well, it's just an uptrend, new high, new high, new high. It keeps going higher. All markets correct. Don't worry about it. You know, when levels get hit, support levels get hit, we worry. But for the moment, markets go up, they go down. Generally, we've got high highs and high lows, and that's called an uptrend. So that's what we follow. Okay, Nasdaq is the same. Made new highs again last night, I think. I don't know if it's new highs actually. It probably hasn't been updated quite yet, but it's doing pretty well again last night. And again, you can see all the volumes here are all quite solid. The momentums are all quite solid. They're all riding nicely above the averages. So nice confirmed uptrend. Where it ends, I have no idea. I just follow it until it tells me it's going to stop. And at the moment, it's not stopping. And this really has been a meteoric rise. 3,585 in the S&P back in September 22, and it's now up to above 6,000. So, you know, pretty extraordinary rise we're seeing at the moment. But this is what markets do. And remember, we had that's that very sage period where markets chopped sideways for a bit, especially the ASX 200. and now we've got this trending period, and that's what repetitively happens all the time. So you can see the ASX 200 here. Again, it was around about 6,500 back in October 22. It's now 8,400 or just above 8,000 at the moment, and kicking goals, high lows, high highs, new highs, all the things we like to see in a trend. And we don't know where it's going to stop, so we just keep following it. So the ASX 200 is looking quite good at the moment, even though there's a lot of participants not participating in the move higher. So we did see a bit of a shuffle this week from the text to the resources. That was just a minor blip. Maybe it's a precursor of things to come. I don't know. But we'll watch that space because it could be an interesting change if it does happen. Because some of those techies, like TNE, like Commodities, they've got very overvalued. So they're due for a good correction at some stage. But who knows where it will come from? For the moment, it may come from here, it may come from higher. I really don't know. But we just follow those trends for the moment. Okay, so that's the ASX 200. We look at the commodities, which is not really exciting us too much, apart from gold. Copper's really just in this very disillusioned sort of stage, doesn't really know what to do. Volumes are reflecting that because they're quite low, a bit choppy, momentum's flat. There's really nothing interesting there in the copper chart until we see a takeout of this resistance here. When this resistance goes, we're going to get some excitement. But for the moment, we're below there and we're chopping about uncertainly. So we just wait for that there. Gold is spiking higher again. It's looking fine. We've got a few good gold stocks in there. Gold Road, Northern Star, a couple of them that are doing quite nicely for us. So we'll just run those while they do. But this really, again, another meteoric rise from a very flat period here to all of a sudden to a trending period. And again, this is the thing we just follow until they stop. Brent crude, on the other hand, is going down, and it just can't take a trick. It's just sitting above this support level here, struggling. And if I was a betting man, which of course I'm not, I'd say it's probably going to fail down here and drop below there. Despite all the things that are going on in the Middle East and things like that, crude cannot take a trick. So I'm not really very hopeful there. All the pressure's down for me. All I do is look at that. I really don't take into account anything else. This tells me all I need to know. We've got lower highs, lower lows, so the pressure is down on Brent crude. Okay, so that's the overseas markets at the moment, so there's really not a lot of change there. Let's go to a few stocks here. I've just got a couple today. There's plenty running there. You can go to Stockradar and look at all the ones that are exciting at the moment, the ones that are moving really well. Some good diversified finance stocks, some good smaller mining stocks, and there's a smattering of other stocks in there. So I'm going to look at a couple today. Firstly, we've looked at AMP, which was an interesting picture. This one for a while, very sad and sage, but it then suddenly took off from 90 cents down here, got through $1.40, so we've got a confirmed trend once it broke through there. So we've added this to our portfolio here, and it's doing quite well. And if we just get rid of this volume spike there, we can see the volumes generally are pretty good on AMP. It's broken out of this range. This is a a 50 cent range, so that gives me a rough idea of potentially where it can go to from 140. 190 could be a potential a move. When we look at this, we extrapolate up this range, it just gives us a rough idea. Trend intensity rating is not -1, it's more like 10 there, so apologies for that there at the moment. It's doing very well there, and momentum is beautifully trending higher, very steady uptrend. I mean, this really has been a big rally here. It may have plenty left to go into it because it's still making new highs. So while it looks like that, we're very positive and just keep raising our stop on this one for AMP. Okay, Qantas, another one, which has been another surprise packet. We love these ones that sort of come out of nowhere and just all of a sudden take off. Qantas was such a negative thing. We had this book come out from Joe Ashton, which is all this terrible things of what Qantas had done to us all. But here we are, where the stock price goes up. So what the market cares about and what the people that buy shares care about is totally different things. And that's what we've got to be aware of. So what we're looking here is money flows, and if you look at the money flow here in Qantas, you can see the price rising and you can see the volume going through here enormously. So there's a lot of money going into Qantas and the price is rising. So for whatever reason, and I don't try to make any reasoning for any of these sorts of things, I just follow these trends. And this is just a fantastic move up high. Broke through nicely above 668 and it's now above nearly at $9 at the moment. Momentum's good. It's all looking positive there. Trend intensity rating of 10. Okay, Rare Group, another one. Some of the techos had a bit of a tick off this week, and Rare Group is no is no exception, but really in the scheme of things, the rise we've seen since early February 22 has been enormous, from $100 to $250 almost. So, you know, it's been a sparkling run. So these little moves down, whether it's $20, $30, is no big deal for me at the moment. So I need some more price action to tell me what's going to happen, and also where my stop is. So my stop set up here nice and high to protect this profit that we've made, and that won't escape me ever, because this is what I do. When my stop gets hit, I will get out of that. So that's a very important thing. And a lot of these stocks, like TNE, Pro Medicus, there's some money that we made, and we need to make that money. In a bull market, I make you money. In a bear market, I protect you and keep you safe. And that's the premise we work on, okay? Remember, the stock market goes higher over time, so we're lucky that it continues higher over time. So that's a natural uptrend anyway. There are periods when it doesn't go, it just goes flat, but that's fine. We just monitor the market, and we just follow what it says, and that's all I really do. And this here has given me some great moves on Rare Group. Okay, 7 Group Holdings, another stock where, you know, the press has perhaps not been so good for the stock, but really the price has just gone up, and it broke through above about $22 back in February 23. So 18 months on, we're at $45 and plus, and extraordinary. We've had 3 good trades through here. We've been stopped out a couple of times because that's what we do. If markets come back and hit our stop, we protect, because they can go down, which will happen to a lot of stocks. But sometimes they will turn around and go straight back up again, which also happens to a lot of stocks. So that's our modus operandi. We just set our stops, and if it makes a new high, we just go with it again. And this is now the second time we've done with the third time we've done with 7 Group Holdings. The first trade was 28%, the second trade 24%, and this trade's probably about 5 or 6% at the moment, just starting to get on its go. But look at the last couple of weeks, very, very strong. Again, volume on this one here, a little bit thinnish. Started off pretty well here, but we're getting a bit thinner here. It's really just a matter of people can't get a hold of this stock, so it's a shortage of stock situation more than anything with 7 Group Holdings. And again, it's a trend to follow. Who knows where it's going to go? It's a bit like JB Hi-Fi, that was, you know, a low price, but it's nearly $100 now. All of a sudden, who would have thought that it could do that? But it has done that. So 7 Group Holdings is doing very well. The trend is up, higher highs, higher lows, higher highs, higher lows, and that's what we want to see when we see a trend. Okay, now the only other stock I've got for you today is one which is probably coming out of, again, another negative picture. It's had a tough time, Telstra, of late, but it's now back on target again. It's now creating a small trend reversal here. We have a high low here. All the evidence we need, we've got here. So first we've got our low point here. We have a rally. We have a pullback to a higher low. That's the warning sign. The signal is really a break above that point there to give us a trend reversal. We have the volume performing well. We have momentum ticking high above the zero level, and we also have it above the moving average. So Telstra's looking quite interesting to me. For those who are conservative, you may want to wait for the hour 1 to 4, which is up around 4.35. But this is looking like an exciting stock to me at the moment, Telstra. Exciting maybe, I don't know if that's the word, but it looks like it's going to go up, and that's the important thing from us. Okay, so there's a couple of stocks for you. Again, we don't need a lot of stocks in our portfolios, which we're going to look in a second. Our high conviction only has 5 stocks in it. That's all we need. And if they're running well, then we're going to make a lot of money, and you'll see the results as to how they look at the moment. So that's the stocks I want to look for today. I hope you're getting onto some. There are plenty more, as I say, in Stockradar that are in that neutral zone, ready to bounce out, that are testing resistance levels or testing reversal levels. So go and have a look at Stockradar, and you'll be able to see some of those stocks. Okay, now let's go and have a look at the portfolios. This is a portfolio update from the 2nd of the 12th, 24. Accumulation index from 2003 to 2024 has been up 9.2%, which is nice. If you just buy the index, that's what you're going to get, which is not too bad every year. 9% if we get that. We can only get 5% in the bank, or just under 5% in the bank at the moment. So 9.2% on the stock market is not too bad. Now look at the portfolios. The conservative portfolio I have, which has a 20 stock universe and only 10 stock maximum in it. Okay, it is running at 10.8% capital annual growth rate. It's currently 90% in equities, 10% cash. Looking very nice, and we're going to look at how these are performing in a second on a chart. The Energizer, 5 stock, This is a premier portfolio. It's full at 5 out of 5, 100% equities. It's running at 16.8% CAGR since 2003. The Energizer 10 stock, which is a slightly larger portfolio, 10 stocks rather than 5. Doesn't perform as well, but it still does 12.9% at the moment, and it's 100% full again. So we're all full on all these portfolios at the moment. The Energizer 5 stock we started in August 20, which is before the difficult period, just after COVID. We're 100% equities on there. It's 14.6% CAGR, and the Energizer 5 stock we started in May 21, 22, 23, 24. 3.5 years ago, it's running at 19% CAGR. So we had a little bit of that dour period in there, but we've now had this really exciting period in there, and we just got a few of those stocks like PME and Premier Investments and a couple of those ones that are in those portfolios that have really kicked it along really well. So if you've got those stocks in there, it will really make it move. So the portfolios are looking good. I think I've talked to you many times how we go through these difficult periods where we need to conserve our money, protect our money as best we can. But generally, the market goes up, and the portfolio results here clearly show you what's been happening since 2003. Now, this chart is on my landing page. It's always there. It's updated once a week for you to have a look at, and you can see what's happened. Now, the 5-stock portfolio, my premier one, is the most volatile. That's okay. If I go down to the 10 stock, it's not quite so volatile, but the performance isn't so good. So a little bit different. So it's a bit of a trade-off there, depending on what you want. So Stockradar high conviction trading models believe in what you do. So even during these difficult periods, we still behaved exactly the same way, because sooner or later we're going to get these good entries, whether it be on Qantas or TNE or Pro Medicus or JB Hi-Fi or whatever it is. They're going to give a signal, and not that we know a trend's going to like this is going to happen, but we do know that trends occur, and that some of these stocks are likely to make big moves, and they are. And you can see here how the portfolios have responded amazingly of late. The 5 stock has kicked up. It's the most volatile, but it's also the best performer. So that's a bit of a trade-off. This is the mid-cap 5-stock portfolio. So that from the top 50 to the top 100 stocks that I look at here, it's also performing very well. Then I've got the 10-stock portfolio out of the top 100, and it's also doing incredibly well, making new highs. We can see the conservative portfolio here, down here, doing very well indeed again, and the accumulation index down here. So we're outperforming all the accumulation index, all these portfolios are outperforming it and doing well. Not that they will all the time, remember, so there are those periods when they won't do it. But for the most part, this is what they're doing. For the last year or so, it's really been quite an extraordinary performance that we've seen this bounce here. So this is what happens. It's repetitive by nature. The stock market behaves the same way all the time because the humans drive it. So this is what we follow, and you just must say believe in what you do. Because that's how you make your money. Don't try and second guess, don't forecast, don't doubt, don't worry. Just follow your trade plan. Okay, so that's the portfolios, and so if anyone wants to get on board with a portfolio, you can follow a Stockradar portfolio, one of these portfolios, or you can start your own portfolio, which is just really like starting as entries come in. We just add stocks to a portfolio. Do you have your full of 5 stocks or you're full of 10 stocks, whatever it is? Then we have to wait for one to fall out before we can add another one. All these control things that I have in the portfolio service that helps you guide you through all these difficult things, and take all the questions out of the portfolio management, because the answers are all there. We know what to do, we know when to do it, and that's really important, because then we don't have to think too much about what we need to do. Okay, so that's the portfolios. They're amazing at the moment. So really what it's all about is trading sensibly with discipline and composure. Nothing about smart analysis or smart picking stocks or all this sort of stuff. It really is just being sensible about following your trade plan with discipline and composure, so we behave the same way in a bull market as we do in a bear market. So in a bull market we make money, but we need to know how to hang on to those gains. So any trade plan must also have a good selling technique in there, okay, to make sure that you do make the most of your trends that do occur. And this is risk management, which is the simple solution to all this sort of stuff, okay? And it's very key. You'll find any trader, any successful trader in the world will tell you risk management is key. It is minimising those losses and running those profits, because the market allows us to do that. Okay, so the stock market really is a very simple place if we let it be. Don't overcomplicate things, don't overthink things, don't get too close to the market. I love to stand back. I don't even look at the charts during the week. I look at them on Friday, I see them where my stop is or my entry levels, and I get the signals and I execute on Monday, and I go away and do other things during the week. So talk to clients and things like that basically. But, so it really is a matter of not dealing too close to the market because it won't help you. It really won't help you. So think smart and be smart is really the key thing here to making some money. So, we're all looking at this market now. Hopefully you're involved and hopefully you're making money because you should be, because if you're not, then your trade plan's not doing the right thing by you. Okay, so that's most of what I want to talk about today is really the portfolio things, because that's really how we make our money and how we control what we do with our stocks. We don't guess, we don't wonder, we just do. Okay, so make no mistake, I personally have made some bit of money, but I haven't got them all, and I don't know what I expect to do, because you're never going to get them all, nor should you expect to, because expectations are really need to be managed as to what you can achieve, and don't worry about if you miss stocks. The main thing is you're making some money, okay, and that's really what it's all about, making a return on your investment. So right now there are stocks being tested. We've had a bit of a tick back this week in some of those high-tech stocks. Plenty of stocks taking a dip. Play a straight bat, follow your trade plan, and success will follow you, okay? Don't go outside your trade plan when you think you should and overweight anything. Somebody asked me about Bitcoin on the website the other day. So, well, Bitcoin's fine, have a go, but just make sure you don't not too heavily exposed. Have a bit of fun, have a bit of exposure, but don't buy so much because it will be volatile, and we've seen volatility in Bitcoin. So we just need to make sure whatever we do that we don't get too overweight or too overboard. We keep our control, keep what our trade plan says all the time. So there are tough times on the stock market when we protect. There are good times, excuse me, on the stock market. You run with it and manage your wins appropriately. So why do stocks do these things like TNE, Commodities? It's an absolute mystery. I don't know why they do it, but they do it, and that's all I know. So if I'm going to get on a trend, I'm going to run with it. Okay? All we need to know is that they do, as far as I'm concerned. As I said last week, don't be reckless in these markets, nor be fearful in bearish times. Hang tough and stay composed. Okay? So that's all I've got for you today. I hope it gives you a bit of an idea. There's plenty of good stocks out there. Go to Stockradar, have a look at it, take a free trial. Check out the blog, check out my YouTube videos each week, which you're obviously doing at the moment, and hopefully it will help guide you. And if you need to have a chat, then you give me a call. Okay, so watch your trends, heed your stops, stay safe, make sure you have fun, and I'll see you all next week.